You are listening to chartingwealth.com for Friday the 22nd of June, 2018. We have our book available, Charting Your Way to Wealth. You need it, and we have it for you. If you look up the right-hand corner of the screen right now, there's a link. It'll take you to a video that tells you all about the book, and it has links there in the description where you can order the book. You can also go to our website, chartingwealth.com, or our YouTube channel, and there are links right there under each daily market review. What do we see going on in the market today? Well, we always start, don't we, with the S&P 500 stocks. Both the S&P 500 and the NASDAQ 100, as represented by QQQ, are both down for the day. 20-year bonds up, gold down. Let's jump into the S&P first. What do we have forming this week? Well, so far, we have a red spinning top. It means indecision tending down. We see the derivative oscillator, which are the light green or red boxes on the lower part of our chart. For those of you who are listening on the audio only, we see the green boxes diminishing in size, which means that as far as the power pushing the equity up, or the equities, this is a basket of equities, of course. This is the S&P 500, which is 500 big companies. We see that speed of increase is depleting as far as the derivative oscillator goes. We also see that on the price percent oscillator. It's actually starting to head down toward the red signal line. When we have crosses on our weekly chart, we call those weekly vertical crossovers, and they are very powerful signals for changes in trends. In fact, it's the most powerful signal we use, but for our quarterly chart crossovers, and we talk about those 4 times a year. And in fact, the latest will be happening at the end of this month in just a few days. And guess who's going to get that information and that special training? Everyone who is signed up for and subscribed to our daily market reviews. You do that at chartingwealth.com for free, but you got to go there, put in your name, email address, and you will get these daily market reviews and all the specialized training and things like the quarterly review when they come out. You only have a few days to do that, or you're going to miss out on it. And the magic of those quarterly reviews are, for the last 20 years, they would have gotten you in and out of the market at just the right times for people who are interested in practicing learning to be long-term traders. Don't we all want to take the money that we have and see it grow and not lose it? Of course, that quarterly chart is magical. Okay, so we see a red spinning top tending down. We see our indicators starting to roll over, going down. We still have a weekly vertical crossover in effect. Looks like that 2-day chart is getting ready to cross over, going down. We've completed our second really strong down candles, and they are getting very close to crossing over on the price percent oscillator. Derivative oscillator is still in the positive. It might have enough energy to cross over going down. We like it when they cross at the same time, either up or down, both the derivative oscillator and the price percent oscillator. That's the 2-day chart. What's going on the 4-hour? It's continuing to move down as far as the price percent oscillator goes. Derivative oscillator is actually losing downward momentum. It's still heading up, although not as strongly with this afternoon movement, but we do see morning was down and the afternoon was down, and of course price movement is below now the weekly trend line, and of course it's been below the 2-day trend line since it cruised past that this last Friday. So of course we gave that warning to start pulling the plug on the S&P 500 back on the morning of Thursday the 14th. So let's see what's going on. That's where we are on the S&P 500. We are not in that trade right now. We did very, very well, of course. Our jumping in point somewhere, around the somewhere around the 172 mark, something like that. And of course, it popped up as high as that's not 172. 272, and somewhere a high of almost 280. So not bad in the course of a couple of weeks. So again, that's the magic and the power of the weekly vertical crossover. What's going on the Qs, the NASDAQ 100 tech stocks? Well, of course, we had 8 weeks of strong up movement on the charts. Now, it's not going up with the same kind of power. This week we had a red open box candle. Now, that's not the same as a closed red candle, which means powerful down movement. It does mean, though, a slowing in up movement, and we can see that we've penetrated our 2-day trend line at the beginning of the week, and we're pushing through the weekly trend line, also penetrating that, going down. Price percent oscillators losing energy. Derivative oscillators still heading up, though. As we delve a little deeper on that 2-day chart, we can see that it's starting to roll over, although what it's really doing as far as price movement goes is sliding sideways. And of course, this latest 2-day candle is a green open box candle, does have a little bit of a wick on the bottom, a big one on top. And again, price just barely looks like it's trying to push through that 2-day trend line, still above the weekly. Derivative oscillator losing energy. And we look at the 4-hour chart, what do we see? Still moving down, actually kinked over, going down stronger, particularly in the afternoon on Thursday, penetrating the 2-day trend line. Derivative oscillator also gained downward momentum. So keep your eye on things. If that 4-hour chart does, if it's a big Friday and it rotates over going up, then you might still have a chance to jump in and ride the up move, which is still showing itself in the weekly and the 2-day trend lines until there is a cross. Back to the weekly, moving on to TLT, 20-year bonds. Remember, we had that weekly vertical crossover going up back on the 25th of May. That next week we had a strong up movement ending on the 1st of June, and then sideways until this past week with some up movement. Derivative oscillator continuing to gain upward momentum. Price percent oscillator heading up. We've never, though, recovered where we were back on that first week at about 120.88. We've never gotten up to that high back on the week ending the 1st of June. So we go from the weekly to the 2-day. What do we see? 2-day not moving up at the same momentum it had been on the price percent oscillator. Derivative oscillator losing momentum too. And we have a red spinning top. Again, means indecision, tending down. It's not a red down candle, but it's an open box. Again, indecision. Not as much indecision as a doji, but still indecision. Price movement still just above the weekly trend line and the 2-day trend line on the 2-day chart. And on the 4-hour chart, we see really just sort of a sideways slide. Again, up 0.53%, but our Heikin Ashi candlesticks are showing us 2 dojis. Green ones meaning up, meaning, again, lots of indecision, tending up. What do we see when we look at the price percent oscillator? Well, the derivative oscillator is gaining downward momentum. Price percent oscillator is pretty much laminated on that red signal line. Looks like it's trying to bounce off of it. We'll just have to wait and see what we see as far as that goes. So that's where we are on TLT 20-year bonds. Remember, we still do have confirmed up movements on the weekly and on the 2-day. And what we're really paying attention to is just how strong is any up movement going to continue to be after things topped off and petered out. We'll just see if it bounces off there and looks strong. You could sure jump in on a 4-hour trade and ride that, see what it looks like. What do we see on gold? Gold is down for the day 0.17%. We're going to look at the weekly first and work our way to the 4-hour. We see a strong red down candle, about maybe, I think it's the strongest we've seen yet in gold. Of course, it keeps penetrating what we thought might be some level, like around the 122 mark. It's blown past that. Its low for the day was 119.82. The last was 120.67 on our Heikin Ashi candlesticks. And again, derivative oscillator gaining momentum, price percent oscillator headed down. We look at the 2-day chart. What do we see there? Well, of course, it cropped over going down back on the 15th. And again, that was the 2-day candle ending then. These latest 2 2-day candles, so 3 altogether, 6 days of down movement. The last 4 particularly strong. And what do we see on that 4-hour chart? Well, it continues to move down. When it looks like it's going to level off, it then just blows through those leveling areas and keeps moving down. It did move up a little bit in the afternoon after it reached its low in the morning. Derivative oscillators losing downward momentum. Price percent oscillator still heading down. So we'll keep following gold as it continues to drop. and we'll see how low can it go. Folks, that's where we are as we end the day. Again, hope you're purchasing our book. In fact, I'm coming up with a special training that I'm going to do for all the book purchasers, and I think it's going to be a short chart training module. I've got the email addresses. When you buy the book, you actually enter your email address into, and I hope you're all putting the correct email addresses, because we're going to send out to you, all of you who've already purchased your books, you will be included. We're going to give you a special short chart training, particularly using the 2-hour chart, which can be very insightful. Again, depending on the time of year, depending on the equity, it can be very insightful on how to use your derivative oscillator to look for beginning drops in price movement, along with the price percent oscillator in jumping in early into trades. This is short chart trading, something many of you have asked about and wanted to practice. So we'll keep you posted. That's where we are as we end the day. Again, you can find the links to purchase our books at the website under our daily market reviews and at our YouTube channel and in the emails those of you who subscribe get every day. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.